What is Loopring? An Ethereum tool for decentralized. If you've been active in the Ethereum DeFi community for any length of time, you've probably been familiar with terms like Layer 2, Zero Knowledge, and rollups. In the context of Ethereum, these terms are often used to describe projects that aim to mitigate the high prices and relatively sluggish speeds that are associated with conducting transactions on the Ethereum main chain. One of these projects is called Loopring. After the significant increase in its token price in November 2021, you may have become aware of it. Or you may be looking for a way to avoid the exorbitant transaction costs associated with Ethereum when you stumbled across the Loopring Exchange. Loopring is one of the oldest and more established DeFi initiatives, created in 2017, although its popularity has only developed relatively recently. Loopring comprises several different entities, including a firm known as Loopring Project Limited, a system known as Loopring Protocol, a decentralized exchange known as Loopring Exchange, and a currency known as Loopring, LRC. This article, on the other hand, will concentrate on looping the technique. We go over what it is, how it operates, and some characteristics that set it apart from other things. What is Loopring? To put it in the simplest terms, Loopring is a protocol and toolkit that allows you to conduct trades without leaving the Ethereum blockchain. More specifically, it's an ERC20 token built on Ethereum's virtual machine, EVM. Several different institutions use this protocol to exchange and execute trades while utilizing a range of protocols. Each of these protocols is crafted to handle a different kind of trade. The word loopring originates from an English word meaning a continuous circular route. And that's what Loopring is all about, whether it's the ring that these trades take place on or the loop of the rings, which is the existing network of traders who are participating in the trading process. Loopring Project created the Loopring Protocol. It allows smart contracts to execute trades with a standard trade feed and ring signature functionality. This implementation uses multi-signature wallets and atomic swap mechanisms to implement ring signatures. Daniel Wang, a former software engineer at Google, is behind the startup company Loopring, which aims to make trading assets and pay premiums on Ethereum faster and cheaper without compromising security. To be more exact, Loopring is a protocol for constructing non-custodial, order book-based decentralized exchanges, DEX, on the Ethereum blockchain. It handles the routing and processing of deals, bringing together sellers and buyers at the current market price without ever requiring ownership of the cash belonging to either the buyers or the sellers. This is in contrast to centralized exchanges, which need traders to deposit funds with the exchange before the exchange can execute deals on customers' behalf. Decentralized exchanges do not have this requirement. The Loopring protocol operates on the Layer 2 level. This indicates that it is constructed on Ethereum's main chain, Layer 1. This starkly contrasts with DEX initiatives, such as Uniswap and SushiSwap, constructed directly atop Layer 1. Both of these models have their advantages and disadvantages. Transactions made on Layer 2 DeFi solutions are quicker and less expensive than those made on the main chain. This is the most important advantage offered by Layer 2 DeFi solutions, as they inherit a significant portion of the security offered by Layer 1. In addition, the liquidity generated by Layer 1 and Layer 2 DEX can lead to better prices than those reached on the main chain. But, like most things in life, this is a matter of trade-offs. To access these advantages while maintaining a high degree of security, always use multi-signature wallets when conducting transactions on DEXs. This is where smart contracts save the transaction history and record all trades. These contracts can be either public or private, and they are responsible for keeping track of funds and channeling them to their rightful owners. Loopring Project is owned by Loopring Foundation, which operates as a decentralized autonomous organization, DAO. Loopring Foundation issues the Loopring token, LRC, in exchange for donations made by users of the protocol. Traders use the token to pay a fee to the exchange. Loopring Protocol. The Loopring Protocol is a software library for constructing decentralized exchanges, DEXs. It's a smart contract that can be used by anyone who wants their DEX built on top of it. The protocol is structured to provide high security, instantaneous, and low-cost transactions. This includes transactions with an order book and ring signatures. For a trader to conduct an exchange, they would make off-chain requests for the protocol to purchase the required items at a predetermined price. The protocol can then execute the trade and deposit the requested items into a multi-signature wallet. This is functionally similar to how things work on Uniswap and SushiSwap. Using Loopring, the protocol can execute orders allowing traders to create their wallets and sign off on a trade. This is what the protocol's smart contract does, but it doesn't manage the actual funds in any way. To guarantee the safety of funds, traders are made to deposit their assets into an Ethereum smart contract known as Parity Signer, which is run by Parity Technologies. It will be used as a custodian until users request a withdrawal. How does Loopring work? Loopring is a protocol that has been made to be used by developers and users on top of Ethereum. It allows for the exchange of ERC20 tokens without having to leave the blockchain. The exchange is made possible through a decentralized order book, which does not require deposits to be held by an exchange. The protocol utilizes a special kind of trading structure known as ring signatures. These orders are recorded and signed by the buyer and the seller. Each transacted item is placed on a ring consisting of 2 consecutive signatures. This allows the transaction to be verified as coming from the signers. In other words, Loopring uses a multi-signature wallet to hold off-chain funds to conduct transactions without storing them on an exchange. The trade can then be executed by signing off on it with both participants' private keys. Transactions carried out directly on Ethereum, Layer 1, are assigned a price proportional to the amount of data they include. Larger transactions, in terms of the amount of data involved, require more computer resources to process, and as a result, they cost more. Transactions are intended to be carried out outside Layer 1 when Layer 2 solutions are implemented. ZK rollups is the name of the cryptographic mechanism that is utilized by the Layer 2 protocol known as Loopring. Loopring's special ingredient is called ZK rollups. Rollups are like carpools. Imagine that you and 3 other coworkers take the same route to and from work each day. A toll of $10 per vehicle must be paid on the route. If you decide to split up, you will be responsible for $10. However, if you share a ride, the cost is only $2.50 per person. Rollups are a form of blockchain technology that groups transactions into batches and then executes those batches outside of Layer 1. After then, the data from the transactions are submitted to Layer 1 for consensus. Because they are carried out in batches, transactions on Layer 2 are more cost-effective. The term zero-knowledge is represented by the letter ZK in the name ZK rollups. The term zero-knowledge proofs refers to a class of cryptographic procedures that enable one party to demonstrate to another party that a statement is true without disclosing any information on the statement in question. Loopring Exchange was the first ZK rollup exchange that was open to the public and was based on Ethereum. The same team that developed the Loopring protocol also developed Loopring Exchange. This demonstrated that the protocol and the technology that drives it could function as intended. The fact that Loopring is ordered book-based is another way in which it stands out from other trading technologies in the DeFi market. Trading on a Loopring-powered DEX is comparable to the experience of trading on centralized exchanges, which nearly always operate based on order books. This is because centralized exchanges and DEXs both use to order books. This starkly contrasts with most DEXs, which employ continual automated market maker (AMM) technology, primarily dependent on user-generated liquidity. As was mentioned earlier, Loopring possesses excellent performance. It can process 200 trades or transactions per second, which is approximately 10 times more than what Ethereum can achieve. According to the team, LRC is a smart contract that will be created and executed on the Ethereum blockchain. Its purpose is to manage and store the trading data submitted by users. Because of this, it's necessary to have a wallet associated with an Ethereum address. Loopring will then provide users with information on how to get their LRC tokens, ERC20-based tokens that enable users to pay commissions to the DEX they are trading on via a loop. History of Loopring. The key goals of Loopring are to enable worldwide liquid markets and reduce the need for users on centralized exchanges or other trustworthy third parties. This objective is pursued through the Loopring protocol, which offers incentives to players in the ecosystem to carry out exchange tasks in a decentralized fashion, with trades being handled using non-custodial smart contracts. While blockchains inherently provide a trustless trading environment, it might not be easy to construct exchanges entirely on the blockchain. More specifically, throughput, processing speed, and computing costs. It may be difficult or prohibitively expensive to imitate the speed and performance of centralized exchanges if all exchange procedures have to be performed on the blockchain. Because of these factors, Loopring has moved nearly all of its data and computation off-chain, but it uses zero-knowledge proofs to continue to preserve its trust-minimized qualities. Loopring's original vision was for it to be independent of any particular blockchain and to function on any major public blockchains that were technically feasible and had smart contract functionality. Loopring was initially implemented on Ethereum to trade ERC-20 tokens. The LRC token is required for Loopring to function properly. It is already deployed on top of NEO and airdropped a native LRN. Nevertheless, the progress toward that objective has been halted. A launch of a comparable product using an LRQ token was intended to take place on top of QTUM, but these plans were ultimately abandoned. Loopring's architecture. The trading process is composed of three primary parts. These include pre-order matching, order matching, and post-order settlement. In the first part of the process, users will submit an order for a specific price to match that order with other orders. Similarly, traders will submit a price at which they wish to purchase or sell a specific token or pair. In the second part of the process, a smart contract will match orders by checking how rich they are and by matching orders in batches to reduce execution costs. After that, confirmation and settlement will occur in the form of a post-order settlement process that involves the locking of funds for various durations after the execution and the distribution of profits. How to use Loopring. Loopring is a protocol that addresses several key issues in the cryptocurrency exchange market. These include a need for more decentralization, slow transaction speeds, and high trading costs. Through its decentralized trading infrastructure and ring matching process, Loopring allows users to trade assets quickly at reduced costs and with full security. The Loopring trading process utilizes ring matching, exchanging non-fungible tokens, NFTs, among multiple parties. These users utilize Loopring's central token, LRC, to carry out the exchange. All exchanges occur on the blockchain, where they are stored and tracked by LRC itself. Loopring has several features that aim to provide users with protection and security. In addition to securing a certain amount of LRC to run an exchange, participants in the network might also have a lower amount of LRC. AMM liquidity providers and makers on order book pairs receive 80% of the protocol fees, with at least 50% of this amount going to LRC-related dealing pools and trading pairs. The remaining 20% are distributed evenly among all other protocol participants. The Loopring Insurance Fund was established to protect against the possibility of unanticipated flaws. Everyone can earn a proportional share of the 10% fee pool by contributing LRC to this fund. Users can stake their LRC using the token voting tool Snapshot after the Loopring DAO becomes live. This will allow users to manage factors such as the fee percent, fee distribution percentages, and insurance fund covered event occurrences. Loopring's token, LRC, is necessary to use the protocol and can be used to process trades. Because the value of LRC is fixed, users will have a unique opportunity to earn a profit through an exchange. By using LRC, users' orders will be guaranteed execution. A trading fee, coins per trade, will be charged by Loopring on top of the trading fees from any other exchange or wallet. The fee is calculated as the average commission for each transaction size, multiplied by 0.1, and divided by the number of transactions on a given round. It is also a function of the average commission on the previous round. The fee can be viewed in detail by selecting View Details after clicking on a trade-initiating contract address. Loopring has been able to gain enough attention in the market to make it one of the top 25 coins. There is an upcoming decentralized exchange that Loopring has created, and many cryptocurrency enthusiasts expect this to become a leading decentralized exchange in the market. The future of Loopring. The LRC token will be used to create a decentralized trading platform. The Loopring project is also promoting research on using tokens to implement ring signatures and zero-knowledge proof systems in other exchange areas. In addition, Loopring researchers are also working on producing a distributed, low-cost exchange system that uses blockchain technology but does not require the maintenance of an entire network of independent software applications. This new project was named Federated Blocks, Decentralized Exchanges. Recently, a research paper for the project was released as it is tested on the Ethereum testnet. In September 2018, after a year of inactivity, Loopring published new research on cross-chain trading using zero-knowledge proofs, with live product testing on the Ethereum testnet. Loopring has several partnerships, including the B token and Hydro protocol. In addition, it is joined together with 6 other companies to form the Open Finance Network. The goal of this partnership is to build the infrastructure needed to support security tokens in the future. Loopring has seen 2 significant updates since it was first made public in December 2017. The one in December 2018 centered on enhancing trade settlement, introducing new fee models, and making orders more flexible. The second event, which took place in December 2019, was the introduction of the Loopring Exchange. This was the first major zk rollup DEX protocol to run on Ethereum. As competition in the Layer 2 sector increases, you may anticipate an increase in feature rollouts and upgrades. Loopring has hinted that big things are on the horizon for 2022, such as the implementation of NFT support and Loopring Earn, amongst other product updates. Conclusion: the Loopring project is the first decentralized exchange protocol with full ring matching capabilities. The Loopring project has made a significant difference from the other exchanges and brought security back to the cryptocurrency exchange market. Loopring still improves in the cryptocurrency community, but it is less popular than some competitors, such as Binance and Coinbase. Loopring's trading fee structure is competitive and cheaper than most exchanges in its class. The exchange platform is secure and reliable, which is a significant advantage compared to all other exchanges in the market. Loopring, most of the time, has lower fees than some of its competitors. Loopring has recently released a new product allowing decentralized exchange trading with zk rollup. Although Loopring has made great strides with its newer developments, it still prevails as one of the top players in the ecosystem because it still inspires confidence and trust in its users.